So today was the Bank of Canada's day where they were going to decide, are we going to raise interest rates or are we going to lower them? This has effects on absolutely everyone. We have high inflation here in Canada currently, so the rising cost of living is sort of increasing faster and faster. The number one way the Bank of Canada can control this is by raising interest rates or by doing something called quantitative tightening, which is a little bit more complex, but essentially it's where the Bank of Canada no longer will buy Government of Canada bonds, and this as well increases interest rates. So this is the big decision. Will they keep it the same at the extremely low interest rates that we currently have, or will they boost it up, which is what everyone or many people were expecting. Today we found out they will not be boosting these rates yet. They're going to keep it at this extremely low interest rate for the time for currently. There's another rate decision in 3 months, and what they're saying now is, hey, we are making this big event right now today. We are saying in the future, we're going to raise interest rates. We're going to do this. There's a path of rising interest rates ahead of us. Now, this is something that's important because central bankers often like to signal what they're going to do in the future because they hope that that will get some sort of response from the Canadian population. If we say interest rates are going to go up in the future, well, maybe they'll start acting like interest rates are actually higher now because they know they're going to be higher in the future. Less people locking in loans that have variable rates because they think that there's going to be higher interest rates in the future. So that was their decision, and we got a lot of questions about it. A lot of questions from the reporters in the session that were all curious about why exactly they were doing this. The number one question was, hey, why are you not raising interest rates if we have a record high inflation? This doesn't quite make sense, especially when the Bank of Canada said that the labor market slack has been absorbed. Now, this is central banker speak for saying, hey, most people, they're back to work. On average, Canadians are back to work and are not having trouble finding work. The unemployment rate is as low as it was before the pandemic, so we can now say that the labor market slack is absorbed. So as a result, that would indicate that you wouldn't need to have low interest rates, because when you have low interest rates, it usually adds more jobs because businesses can borrow for less money and hire more people. This is sort of the loose way that affects the jobs market. But even with that being the case, they didn't raise rates, even though they're saying that the economic slack has been absorbed, or the job market labor slack has been absorbed. Instead, they say that due to Omicron, they're still uncertain as to what exactly is going to happen, and maybe the economy needs a little bit more support, so we're going to keep our interest rates as low as they have been throughout the entire pandemic. Now, what does that mean for you? Number one, over the short term, it doesn't seem like there's going to be a slowdown in the real estate markets because we have these low interest rates, right? We have this cheap money that people can borrow. When we have low interest rates, the same people who could qualify for less mortgage before, well, they can qualify for more mortgage because their payments are lower on the higher amount of money borrowed. So this is what's driving up the real estate market. And so likely we're going to see that continue to rise as well. We're likely to see inflation continue to rise, or at least stay up where it is around the 5% mark over the short term, because again, when there's low interest rates and high inflation, people are more incentivized to go out and buy things right now today because in the future, those things are going to be more expensive. That causes more demand, and that demand sort of translates into even more inflation. So it's this flywheel that keeps on going and keeps on going. So that was their response to it, that, hey, we don't know what's happening with Omicron. We think that some supply chain issues that are rising the cost of living, well, they're going to get sorted out. And some of these sort of other short-term things, well, they're going to get solved on their own, so we're not going to do anything yet, but we're going to signal that we're going to raise rates in the future, and hopefully people will listen to what we're saying here. So it's going to be really interesting to look at going forward and find out, hey, in March, are they even going to raise rates? Because they're stuck between a rock and a hard place right now. Many Canadians, especially Canadians who aren't on the lower side of income and savings and wealth, higher wealth Canadians tend to have stock portfolios and real estate portfolios and investments, right? When we have low interest rates, investments do really, really well because these big companies can borrow a lot of money, and that's good for the investors that are invested in them. They can borrow money for cheap. But when we have a raising interest rate environment, well, a lot of these sort of these investments, both real estate and stocks and equities, those can tend to go down in value. So no matter what the Bank of Canada does, you're going to have half of the population a little bit pissed off about it. So it's interesting to see what they're prioritizing and who they're prioritizing. And then additionally, we're seeing a lot of pressure from the federal government, right? We have the Conservatives that are pressing the Liberals saying inflation is awful, it's because of your spending, Trudeau. And this could very well become a political issue if inflation stays around for very much longer. So the fact that they're keeping interest rates low could be a bad look for Justin Trudeau and the Liberals, especially when so many people are feeling the effects of this higher inflation that, at least for the short term, isn't going to be dealt with by the Bank of Canada, even though they're signaling, we say on the live stream, signal, 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 even though they're signaling that this is going to happen, they're not actually doing it yet. And it's not even confirmed that they will do it in the future, even though their forward guidance is that they will. So hopefully that's a good summary for you. This is likely something that I'm going to clip out of the live stream and throw it onto the YouTube channel as its own video. So if you're watching this after the fact, make sure to join me next time we have a live stream. We watched the whole interview with Tiff Macklem, and you can watch the recording of it after you watch this sort of summary. So hopefully that helps you out at least a little bit.